Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond. It is 5:24 in the a.m. Eastern Standard Time. Let's begin with the U.S. dollar. The dollar is down slightly this morning, but you're seeing a ton of volatility on the dollar. Look at these trading ranges that we've seen over the past 2 days. Now, while this type of volatility at the top of a trading range and historical resistance is not the ideal price action you'd want to see, I would still say that odds favor bulls because the path of least resistance remains higher. Now, as we extend out our resistance levels, you can see that this last bar here, overnight, we had broken out. At current, we're pulling back. This bar opened up at 5 a.m. Eastern Standard Time, and we are down below that level. We have a long way to go before we close out this bar, and I think that in all probability we will proceed higher here. But if we do not, expect a retrace at a bare minimum down to the 96.12 level, and we'll see if that holds. Now, taking a look at gold. Gold this morning is flashing a dead cat bounce. Yesterday, you had reported that the Russians had dumped, according to CNN, all of their treasuries. When it turns out, I think their report was 85%, not all of their treasuries, 85% of the Russian treasury debt was dumped. You didn't see a measurable move higher at all for interest rates, which is what one would have expected. You would have seen gold rally. You didn't get that. None of what you would normally expect occurred. And sure enough, an article came out later yesterday debunking the CNN report. While, yes, there was some Russian treasury selling, it was not at the magnitude as one might expect. I think it was 45% versus the 85% of treasury holdings. So while it's good to see a reprieve here for gold, I am not overly optimistic that this bounce is going to hold. And as I mentioned last night to members on Market Wrap, today may just be a turnaround Tuesday. Let's see whether or not the strong futures action holds up throughout the day, or do we fade? And that fade is going to begin to deteriorate confidence in this market. So I would not be a buyer of anything in the early morning hours. Let's watch and see how we close out the day. Let's take a look at the Treasury market. So we have the 10-year Treasury note, which is under a bit of selling pressure. So that means yields are on the rise. We haven't broken yet. We're holding the rising 20-period moving average. Taking a look at oil. Oil is on the move higher today, up 70 cents on the barrel. This is the Brent price. And it appears as though we have broken out above resistance on oil. Now it's a matter of whether or not we begin to break out above these resistance levels here. 74.02. Do we close above that level? So I wouldn't be a buyer of oil until we begin to break out above these significant resistance levels. Because again, what I'm fearing here is that we may just be seeing a dead cat bounce. Taking a look at the stock market futures. Let's go to the S&P 500. Not loving this at all. We're up this morning nearly 10 points on the day. We bottomed out at, let's call it 28.20 yesterday. We have a double bottom set up off of that level. And we are limping back up right now. The last bar, you saw topping action similar to what you saw back here. That's a sign of sellers above. You have your 20-period moving average on a 4-hour chart, which is declining. That's going to act as an overhead declining ceiling until such time as we get through this resistance level here at 28 let's call it 2843 on the S&P 500. Let's take a look at the NASDAQ. Yeah, again, not loving this rally higher. While we're better technically on the NASDAQ as we're trading above the 20-period moving average in green, you're still seeing topping action. Like this topping tail here, this one here, one forming here on a current bar, which is still early again. So do we break out above resistance, or do we break down? I'm ready to cook myself some popcorn, put my feet up, and just watch. All right, that's it. I don't want to trade a darn thing until we get a resolution to which way this market plans on heading. Here's our lines. Here are our lines in the sand. It's very, very simple. The pressure is not on us to make the decision of as to whether or not we want to buy. The market should tell us if I want to buy or if I want to sell. Do I want to go short? The Dow Jones, which has been lagging of late, very similar price actions to what you're seeing on the other major averages, limping back up off of yesterday's lows. We're up 83 points, which is off the highs of the morning session. So again, the pressure is not on us. The pressure is on the market to dictate which way we're going to go. Now, if you got stopped out of positions yesterday, do not revenge trade. Do not bet because the futures are higher that the selling is over. I'm not a believer in it. I talked about shorting this market over the weekend. We're very close to pulling the trigger. And here are our lines in the sand for the Dow Jones. Now, I get a lot of emails asking my opinion. Which way do you think the market's going to go? At current, I am fairly bearish. However, I cannot ignore the trend. What is the trend? The trend is still up. This is a weekly chart. But this market is under a lot of pressure. And we have a ton of geopolitical events out there which can doom this market. So I'm at the ready right now to pull the trigger on shorting the market. But the market's got to send us a signal that it's weak and getting weaker. How does it manifest itself into showing that it is weak and getting weaker? We rally in the morning, we sell off into the close. Simple as that. Let's segue over to a couple of stocks that we're watching as well as some member stock chart requests. First chart up, Facebook. Facebook, as we all know, had a gap down on earnings. We bounced off the 165.56 level, rallied up to 188. Nice trade. We're pulling back now. We're back down below, as of last Friday, below the 200-period moving average. I am not loving Facebook. Might we put in a higher low here and rally? Sure. I wouldn't be a buyer of Facebook until we recaptured the 192.50 level or on a pullback and a retest of recent lows. This is a broken stock. It was a momentum trade. It is no longer. And this is what I concern myself with. This is a weekly chart. This is what I concern myself with. Are folks out there that either eventually stopped out because of this sell-off due to margin calls, whatever, and now they're thinking of getting back in at a cheaper price to try to get that money back. Move on. It's a broken stock. Give it time to heal. Perhaps we'll just consolidate here for a while. I wouldn't go shorting it, and then we'll press higher. But as it stands right now, Facebook is dead money. Too much risk, not enough reward. I would avoid. Lululemon. We have been very bullish on Lululemon. We remain bullish on Lululemon until it gives us a reason not to be bullish on Lululemon any longer. So we pulled back yesterday. This is a daily chart. And we held the breakout point, which we managed to break out on Friday. So the path of least resistance remains higher for Lululemon. If we undercut yesterday's lows, I would be out though. Until such time, this RSI is looking good, Stokes are looking good. I will caution, I went over this with members last night on Market Wrap. The momentum names are coming under pressure. You just saw it, Facebook. I'm going to go over Google. I'm going to talk about a couple of other momentum stocks in a moment. These are or were market leaders. So Lululemon, I like. The path of least resistance remains higher. I would move my stop up, though. Please preserve capital. Grubhub, a leader, right? It hasn't broken down yet, but the market is sending you signals. We rallied. We booked profits on Grubhub back here. It pulled back. Now we're rallying back. Are we putting in a lower high? Perhaps. And why am I even asking that question? It's because we have a lot of topping action going on here. We had broken out above resistance, pulled back, retested, rallied, topping action, profit taking. Again, yesterday, we rallied, gave up those gains to close negative on the day. Volume to the downside, very light. We're rolling over on Ultimate Oscillator, really weak on Stoch RSI. Rolling over on Stokes. This is not the price action you want to see. Lower highs on Williams percentage R. Where would I put my stop on Grubhub? I would keep it tight. On a close below 127.50, I'd be out. Steve Madden shoes. We just booked profits on Steve Madden. Another name which is coming under pressure. Lots of topping tails here. That's a sign of sellers above. We have not broken support yet, and we may not. However, it's not looking good. We had broken out on Ultimate Oscillator, and we have broken back down. We have a breakout point failure here. Never, ever good if you're long. So a caution flag is on the track. Move your stops up, folks. Google. I mentioned a couple of weeks ago we were looking to short Google. Now it's giving us a lot of reasons to do so. Take a look. Let's update the chart. Okay. Take a look at the lower highs we're seeing on RSI, validated by price. Yesterday, a bearish key reversal. And in all probability, we're going to retest this lower band of support. Now, if we break out above this upper band of resistance, well, then all is well with the world for Google, right? It's going to proceed a lot higher, especially if we take out the 1291.44 level. That's a continuation breakout of a triangle formation. But the market is sending us signals here that all is not well. This topping action here led to 2 days worth of selling. Let's see whether or not it holds support. If we break this dotted blue line here, and let's call it the 1245 level, we'll come all the way back down here to retest this low. If we put in a double top and we take out this prior low here, that's a confirmed breakdown on Google. That means that, at least in the short term anyway, that the path of least resistance has changed for Google. And you would want to look to the short side, or at least go to cash and watch for a better risk reward re-entry point. The next chart up is KSU, Kansas City Southern. Now, Kansas City Southern had forward-looking guidance, which is not the best, and we have concerns about NAFTA impacting their earnings. So this is a company-specific sell-up. I took a look at names like Union Pacific. They're holding up. They were down yesterday, but only at the margins. KSU obviously took it on the chin really hard yesterday, down 2 1/3%. So this is a broken stock. I would avoid these shares. We have a lower high, and now we have a confirmed breakdown below the prior low. So you want to avoid. If you're looking for a rail stock, check out UNP. Union Pacific is definitely holding in there better. But I wouldn't want to be a buyer until the shares broke out. And I'd like to see the transports, the Dow transports, confirm any breakout before I got long of Union Pacific or any other transport stock. I'm concerned about this market, folks. Let's leave off with the GDX. Now, the GDX, we have a continuation breakdown this week. We are long of the gold miners. We did stop out. We began buying back in, accumulating a position yet again. We are very close to historical support on the GDX, going back here to, we could just say we're at it, to be honest with you, only a couple of pennies away, going back to November of 2016. If it fails, we're going lower. Now, another comment I'd like to make about the support level is, I just said the obvious too, if it fails, we're going lower. I just got that, okay? It's early, bear with me. I wasn't trying to be overly smart. because I sounded stupid. So if we look back in history, you can see that this acted as resistance at times as well. So there should be a pretty good support level. That doesn't mean we can't make a new daily low. Now, if it fails and we proceed lower, our next stop, which is really what I wanted to say, is down at the 1843 level. So just be careful here. We have a new weekly low. We are at support. If we break support, we're going to need to look to stop out of our current. We're using a gold mining ETF, a leveraged ETF. We're going to need to stop out of a portion of that position, because I think what might happen here, going to a daily chart, is that if we break down below key support, is that we could see an extreme oversold sell-off, meaning capitulation. But that could take us down significantly. So we're going to want to look to raise cash and then look to buy back at lower prices. And what price action would look like on the GDX were we to break down to extreme oversold levels. And what does that mean? It means that you're going to have RSI down below the 20 level if that's the route we're going to take. I predict that it will be the route we take if we break support today or this week. If we bounce, different story, right? But if we do not, if we fail to hold support, in all probability, we are going to extreme oversold levels. Let's go to a daily chart. And what that will look like, at current, we have RSI on a daily basis at 25. In all probability, we will go down to below 20. Now, this is a large ETF. I wouldn't predict that it would stay there long, but we could easily see a 16 handle on the GDX if we do not bounce. Volume was huge yesterday, so some institutional distribution. These Stokes are like a coiled spring. Is this. Now, for those of you out there that are looking to open up a new short position on the gold mining names because they're breaking down below support, you better keep your stops very, very tight. Because as I've been sharing with members, is that when you get rounding tops, meaning you go oversold on your Stokes, rally, and then roll over below 20, there's no arguing that's a complete sign of absolute weakness. There's a buyer's strike. People hate it. But being a contrarian, you have to put your head up and say, wow, people hate this name. How many shorts are shorting into this weakness? It's got to be huge. And there is a record number of shorts in the gold names. And when you see these rounding tops below the 20 level, the resolution is equally ruthless as the sell-off. So you can expect one hell of a rally on the gold mining names within the next couple of weeks. Bookmark this comment, and you can quote me on that. And that's it for this morning, folks. If you watch this on YouTube, give me a follow there. Give me a like. Leave a comment. If you disagree, fine. Leave a comment as well. And everybody have a profitable trading day. I'll talk to you soon. Be well.